Hello, everyone. All right. I'm back up and running. It's your boy Robert Lee with EXP Realty. I am back, you guys. Y'all gonna have to disregard my little hole in my screen back there. My son, he pulled down my little cover for my back screen. You know, this is kind of like my office, so I don't really do nothing. I need to put one of those little shades on there, but I'm lazy. So, sue me. So look, I know you guys miss me, but I'm back. Um, guess what? Do you guys have a mentor? Because if you don't, you need to get one. And the reason why I say you need to get a mentor, a lot of times we always tend to believe that we're smarter than everybody else and we know everything, but we tend to don't. But it's all right to have somebody to push you in the right direction. Because my mentor, she uh she was telling me I need to put up some stuff on real estate and quit playing with my business. I said, you know what? You're right. I need to get back to talking to you guys. So I'm going live real quick. I'm gonna try to keep it real quick and sexy. I'm trying to be in and out. You know what I mean? So without further ado, one thing I want to ask: do y'all know anybody trying to buy a home? Because if you do, let me know. Because that's who I work for. Let me know. Do y'all know anybody trying to buy a home, or do y'all know anybody thinking about buying a home, or maybe you're thinking about buying a home? So look, let's talk about the lending options that you guys have if you are thinking about buying a home. So, like I said, this is going to be real quick. So, massive disclaimer: I'm not a mortgage broker or a lending officer. I'm a real estate broker or real estate agent. So, with that being said, always contact your nearest lending company, your nearest mortgage company. If you have any questions, if you need anybody to be referred to, I can refer you to mine, Mr. Alonzo Stanley at Bell Mortgage. But if you need to have any questions, just let me know or let the people know, and we'll get the word out. So, real quick, a lot of people always wonder, when I show my lives and they want to know, say, hey, how much does it cost to really purchase a home? Well, I'm here to tell you, you could buy a home with $0. Did y'all know that? I bet y'all didn't know that, because I know y'all didn't know that. A lot of y'all, I know, and the reason why I know a lot of y'all didn't know that, because if a lot of y'all knew that, y'all probably would have been about a house. But guess what you got to do first? You got to get your credit score up first. You have to get your credit score right. So I'm going to go over there real quick. But I know if you knew that you didn't need but $0 to purchase a home, some of y'all would have been about a house by now. So why some of y'all haven't, I have no clue, especially if all you got to do is get your credit score up. So look, let me go ahead. Let me exit this screen here. Here we go. Here we go. I got to be able to. Let me go ahead and get my DMs rolling. So if y'all see on the bottom, I got my little time ticker on the bottom, says free credit consultation for anyone. Or if you have any real estate questions, please DM me. Listen, it costs nothing to DM me. It costs nothing to get on my nerves. It costs nothing to ask me a silly question that you might think is silly, but it's a perfect question. So I know some of y'all got some of the good questions. So at the end of the day, hey, ask them. Reach out to me. I know everybody trying to shop, but y'all gonna see this video. Y'all gonna see them scrolling down your timeline because y'all can't hate to see me go. You know what I mean? So look, let's talk about how much it costs. How much does it cost to buy a home? So I said $0, right? So do y'all believe me? Let's go with some numbers. So theoretically, when you purchase a home, you probably need somewhere between 3.5 or 5% to put down on a home. So of course I know that's not any money. So that is money. So let's say if you're looking at 3.5% down, plus the closing costs, that's something a lot of people don't know about. So you do have costs that are incurred with the process of the loan, with the process of the title search, with certain other information, certain other things that you have to deal with purchasing a home. And within those closing costs, you're somewhere between probably about 2.1, 2.3% of the price of the home. So if you're looking at a $300,000 home, be prepared to pay somewhere between 15,000 to maybe 16, $17,000. So I thought you just told me, Robert, that you could buy a home and pay nothing. I did. So I just want to go over the normal expectation when it comes to purchasing a home. So this is how you not pay for the house when you're trying to buy a house. And let's say if you don't have a lot of funds saved up. You need to pay attention to one, the lending options that you have available to you. And then two, you need to get you a really, 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 really good real estate agent like myself or like the people on my team. I got Tracy Wiggins in Atlanta, Georgia, and she still be representing down here in Middle Tennessee. I got Randall Richmond, he in West Tennessee and Memphis, and pretty much all of West Tennessee plus Memphis on that side of the Tennessee River. I got Toria Howard, she out there in Memphis as well. She representing down there in Memphis and anything in that you could say that West Memphis, Arkansas area. I think her license can stretch to that too as well. If it can't, you can ask her. So listen, I got people all over now. I got real estate agents all over the planet. I got Sheena. Sheena, where's Sheena at? Sheena, I think Sheena's in Mississippi. Sheena, you in Mississippi? Sheena Ingram, she in Mississippi. So she can take care of all your needs down there in Mississippi. So hey, listen, we got them all over the world now. If I left somebody out, don't shoot me. Don't shoot me. Just talk to me. I'm getting old. My brain getting old now. But anyway, so like I was saying, you got to get your good real estate agent. So what's the purpose of getting a good real estate agent? Well, I'll give you an example. My first 5 contracts that I made a deal on, none of my clients paid any money down or any money at all. They purchased a home without paying any money. And then you're going to say, well, how is that possible? Well, see, here's the thing. Let's say a house was listed for $300,000, but your lender approved you for up to $350,000. Previously, before the COVID, I could help negotiate that into that. So if I needed to, I would go to my clients and say, hey, look, how much money you have? And they would say, this is what I got saved up. This is what I don't want to spend. Or maybe they got something saved up and they want to save it for moving expenses. So I say, okay. I said, all right. So are you okay with me negotiating into your loan? So basically, I can negotiate your closing costs into the price of your home. And when you're talking about negotiating $10,000 into a price of something that's $300,000, listen here, let me tell you a secret. That's not a lot of money. That does not really affect your monthly note is all I'm saying. So if your monthly note going to be $1,569, your monthly note probably be like $1,530, or it'll probably be $1,515. Like you're talking 30, 40, 60 bucks difference if I just roll your closing cost into the price of your home. So to give you an example, what that looks like is if your closing cost was somewhere around $6,000-$7,000 and a home was listed at $300,000, I would first negotiate. So yes, I'll probably hit them with the pre-COVID. I would hit them with the low number, maybe like the 295 or the 290. They're gonna come back and say, no, we really want 300,000. And I'll say, okay, if you really want 300,000, I'm willing to give you 300,000. But if you take care of my client's closing costs, we can do 300,000. So they're going to get excited 9 times out of 10. Well, I'm not going to say that's what happens because typically it may not happen if you're going against a really experienced agent, but it just depends. But I give it to you like this. That's what happened for me and my clients. And so they were able to get the home at the listing price and not pay any closing costs. Now you have to transform, or you have to move to the fact of paying that down payment. And so if you're going to pay that 3.5% down, you're looking at somewhere 10.5. So on 300,000, I might be right, might be wrong. Somebody could tell me if I'm right or wrong. So on 300,000, 3.5, I think it's 10.5, 10,500. So that's typically what you would have to bring to the table. So most of the time you have to have that saved up, have it in your savings or something like that. You can get a gift. You can have a family gift it to you, but you got to be able to prove that. And they have to, provide documentation for that. So let's say, let's talk about the loan options. So first I'm going to talk about the conventional loan, and then I'm going to talk about that down payment. So keep that down payment in mind, you guys. Do not forget about that down payment, because I know you're going to say, hey, I thought you wanted to talk about that down payment and how I cannot pay for nothing. So don't let me forget. So let's talk about the conventional loan, and then I'm going to get to that. So the conventional loan is the first loan I want to go over. It's a conventional loan is a non-government loan. So the pros of a conventional loan, you can, for first-time home buyers, they got a lot of good programs. Also, for the conventional loan, you don't have a lot of restrictions. So for a conventional loan, I can have this house and I can do another conventional loan as a second home, or I could do another conventional loan as an investment property. So those are kind of like some of the key benefits of a conventional loan. Now, like I said, no matter what I tell you today, guys, always refer to your lending or your mortgage broker or your lending officer. Always, because that's the professional in the business. That's the person that knows it all. I'm just somebody who pretends to know it all, and then sometimes listen to them when they tell me what I need to say, right? So listen, the minimum credit score for a conventional loan is a 620 for the most part. You got to have a 620. For the most part, there's no wiggle room. It's 620, no room around it. So keep that in mind. If you don't have a 620, you got to get to a 620. Once again, I'm your guy that can get you to a 620, but if you don't got a 620, that's what you got to get to. I got my notes down here just so I can make sure I don't just be getting off track. Okay. Yeah. So that's pretty much what I want to talk about. So with the conventional loan, you got something that is real ugly and it's not sexy. It's called private mortgage insurance. you private mortgage insurance sometimes is going to be an extra 200, 300,000, 200 or $300 added to your home note. So if your home note was like 1,500, then you'd be looking at somewhere like 1,800, right? So you can say, well, hey, I don't want to pay extra 300. How do I get rid of that PMI? The best way to get rid of that PMI is to pay 20% down. If you pay 20% down on your conventional loan, then you can get rid of that PMI. So 20% down of 300,000. Well, we already know what 3.5 was, right? So if we do that 3 times, that's about what, 30,000, I'm assuming. so hey, if my math off, y'all got calculators, I don't. Hold on, you know what? I got a calculator. I'm gonna quit playing with y'all. Here we go. Let me see. 300,000 times 20%. 60. Ooh, I was way off. So yeah, you need to bring in $60,000 to the table. That's a lot of money. So guess what? If you don't got 60,000 saved up, then you got some options. If you're going conventional, you might as well be ready for that extra PMI. And if you can afford that monthly note, hey, more power to you. You know the best part about it? Any point in time when you get under the 20% of your loan, you can refinance. So if you can hurry up and get below that 20% and refinance, then you can knock out, like I said, $300 of your payment. And I know that's vital for anybody, right? All right. So what about your other lending options? Because I know you heard about the other ones. You heard about your government-backed lending options. So your government-backed lending options are going to be your FHA loan, your USDA loan, your VA loan. All right. So what's the difference? So what's the big deal about those three, right? So the main thing is they're government-backed, which means they're gonna have some restrictions on what you can and cannot do. Now, a positive is if you purchased a home 3 years ago and it's been over 3 years, you can take advantage of the first time home buyers program again when you purchase your next home if it's been over 3 years. So that's a major, huge positive. If you What else you got when you got the government-backed loans? The credit score. The credit score does not have to be that high. So for my people that are struggling in the credit score realm, you can go down as low as a 580 with an FHA loan. Now, I've heard this, and I don't know if there's any truth to this, but I heard you can get lower than the 580. You're just going to have to offset how much you put down. So if you had a 580, then you probably theoretically only need that 3.5 that we talked about. But let's just say you got a 560, but you don't have any like outstanding balances on your debt or whatnot. You just pretty much just got, kind of like what we call like brand new credit. So you got like a 560. I've heard that if the more you pay down, like if you go up to almost 10%, they might can get you down to like a 530. I don't know if there's any truth to that. Once again, what did I tell y'all to do? Refer to the experts. So I'm the expert in selling a home and getting your credit score up. But your mortgage lender or your mortgage company or your lending officer, they're the experts in that right there. So like I said, I told you who you can call, my preferred lender. But like I said, you can pretty much get on the phone with anybody. They're going to answer any kind of questions. But anyway, so how does that benefit you if you have a lower score? Well, it benefits a lot of us because a lot of us don't know that. You think just because you get a lot of stuff taken off your credit file that you're going to have a 700 credit score, and it's not that easy. You can get the stuff taken off your credit file, but you're not gonna have a 700 credit score if you don't even have credit utilization. So a lot of us don't have credit cards. I fell into that realm, and when I bought my first home, I just got rid of all my credit cards, and I thought I was supposed to have this good credit score, and I didn't. But I just barely had like a 619 or 620. I just barely just before 620, but I still got approved for a home because they seen that I had established credit and I was good with my established credit. I just paid everything off and closed everything out, which don't do. Please don't close your credit cards. Pay them off, but don't cut them off. All right. So when you do that, you're missing out on about 165 points of your utilization. So I had a 600 and something, but when I opened up my credit card accounts, started using my credit cards, then that's how my credit card score just jumped above the 700. So I'm just giving you that example because there are a lot of people that are trying to be home buyers that don't have credit cards, and you don't really need them to have them. I'm just here to say that you do need them for a good score, but you don't necessarily have to have them. So this is not a, hey, you need to get one. But in the case of trying to improve your credit score, you do need them, and it is necessary. So for the people that don't have them, then I'm just giving an example of the person that probably would have like a 580 but still get approved. Because just because you got a 580 score doesn't mean it's a horrible score. It's just not good. But it won't stop you from getting a home if you don't have any outstanding balances of debt. So if you don't have, like, you can have a 580, but like you better not have no collections. A lender is not going to approve that. You're not finna have no collections. You're not finna have 100K in student loans for no reason. You're not finna have all this other stuff in the back of this credit file. Like your credit file better be like it better look clean, just not established. And if it's not established, you can't have a 580 and not be established. So I just want to go over that. But anyway, so back to the benefits of the government-backed loans. So the government-backed loans, like I said, the main benefit is they're real lenient on the credit score restriction, and also for the USDA loan. So this is for my rural area people. I grew up in a rural town called Ripley, Tennessee. So if you heard of it, tell me, shoot me, tell me if you heard of it, give me a thumbs up or something. But anyway, yeah, I grew up in Ripley, Tennessee. That is a rural town. So the USDA loan is real vital for my rural town people. And the reason is when you live in the city, there's a higher cost of living, which means the jobs tend to pay out more. But when you're in a rural town, you don't have a lot of options to jobs or a lot of options to high paying jobs. So the cost of living is going to be smaller, i.e. in turn, the people's salaries are smaller, put it that way, if that's the best way to put it. And so with that being said, it doesn't make any sense for a large mansion in my hometown is probably like $250,000. That's like a large mansion off 10 something acres or something like that or whatever. I mean, it's going up, of course, but I'm just throwing something random out there. That same home up here in Nashville is going to be like $900,000. So I'm just kind of giving an example. So I say that because the government doesn't expect consumers in the rural areas to be paying $900,000 because you're not privy or you don't have access to the jobs that's going to pay you for those $900,000. Does that make sense? I'm hoping making sense. Does that make sense for you guys? So it's not a thing of, hey, you live in the country. It's more so I live in the country. These are my options as far as, salary wise. And therefore my land and the cost is down too as well. So in the rural area, if you get a USDA loan, they have some wonderful programs where you don't have to pay a down payment. Is this thing on? So I just told you how I can negotiate your closing costs, right? Then I double back and told you how certain programs you can get that you don't have to pay a down payment. And I live in the county, and I live in Murfreesboro. I live in the county area. There are some areas right outside of Murfreesboro that are considered USDA. If you want to find out, if you live in the county area, and you want to find out if an area that you're thinking about moving into is qualified for USDA, just look it up. You just go to USDA probably.com or USDA eligibility.com. Just Google it. If you Google the word eligibility and then the acronym USDA, you'll get your answer, or it'll give you a map and then you can look it up. So imagine back home in my hometown. So if you're back home in my hometown, you're thinking about buying a home. Imagine being in a rural area, get to take advantage of a USDA loan, and you don't have to pay nothing down. And then you got to have somebody excellent like me, or Randall if I let him slide in my territory. He can't be sliding in my hood too often. But if you have somebody like me or Randall to help you out and negotiate it, you could actually purchase a home without paying a red cent penny. And I don't even know if that exists, right? So do you like that or you don't like that? You don't like that? That's too much information. That's too much for y'all. I'm blowing your mind. Okay. All right. So I do know that I know somebody likes, well, what about conventional? Do they have any no down payments? I do know there are some programs or in certain bank loans that they carry certain certain credit unions carry certain conventional packages where you don't have to pay a down payment. I don't know about FHA in any of their packages where you don't have to pay a down payment, but I do know typically the minimum is a 3.5 down. VA is another government-backed loan that I do know. They do sometimes take care of the down payment for you, and sometimes they take care of the closing costs. And what else they do? VA got a lot of hidden gems and features for the VA loan. There's only one catch. You have to serve our country to be able to do that. You have to have served or serving our country to be qualified for that VA loan. I think there's a chance that your spouse could qualify, but everything does have to go under your spouse. And yes, you do have to be married. VA is not playing around with that. So you can't have no boyfriend that was in the Army or the Navy, and then y'all broke up later, but you ain't told nobody, and you're trying to take advantage of the VA. That ain't going. I'm just trying to tell you that ain't going. What we got here? All right. All right. So let's recap. So you got your conventional loan, which is not backed by the government, and then the government-backed loans are the FHA, USDA, and the VA loans. Private mortgage insurance is ugly. You don't have private. Well, let me say before I say you don't. I don't think you have private mortgage insurance with your government-backed loans. But once again, who do we refer to? The experts. I done already went over that, so y'all should know who the experts are by now. But if you do have at least $20,000 to put down, then you can get away with not paying your PMI on a conventional loan. I'm recapping, by the way. What else? Benefits of the FHA loan. Like I said, they're real lenient. Their credit score baseline is a 580, but I heard it through the grapevine that they can possibly go down lower if you got a really squeaky clean credit file and you have a lot of money to put down. Then they may accept a little bit lower. So I heard they got some wiggle room. With that being said, primarily, if you ask yourself, what do I really need? What type of score I really need to shoot for? Honestly, you really need to shoot for as high as you can. You know why? Because you want to get the lowest interest rate that you can. That way you can have the lowest mortgage payment that you can. So a lot of times, a lot of people rush into it and just say, hey, you mean to tell me I can get approved with a 620? Yes, you can. But do you really want to pay that possible high interest rate when all you got to do is really focus on improving your credit score to get that 680 that's going to get you a better interest rate, or even better, a 700 to get you an even better interest rate, or let's get to the 750. Once you get into that 750 realm, then you're pretty much going to be doing good. One thing I will mention or add, you can always buy down on your interest rate. So there are some people that had a 3.2 going into the purchase of their home. They might have paid an extra $1,000, $2,000, or $3,000, and then they get like a 2.7 or 2.9 or 2.8 or something. That is possible. Now, I don't know how many points you can buy down, but you can buy down. The name of the game is buy down, right? You know, if you got the money, you know, they're willing to do some of any and everything. So with that being said, I just want to close out by saying, remember what I said. And if you came in at the end, then you need to go back to the beginning. You need to press rewind. And don't forget what I always say. You need to love on your people. I don't care what else you do. And we talking about this, we talking about that, but you need to love on your people. But nah, for real though, if y'all have any questions about real estate, credit repair, or maybe your love life, I can help with that too. Just shoot me a DM. I'll give you a free consultation on all of that. I don't charge to talk to you. So, hey, ain't no reason for you not to ask no question, right? All right, y'all have a good day. Y'all let me know if y'all hear somebody in them streets that need a house, or if y'all hear somebody in the streets that need their credit fixed. Y'all know where to send them.